Welcome back, everyone. This is Thomas Triple T Time with another new bullish crypto analysis. Let's dig in and take a look at the market opening for today. This is the crypto market. It is red. Good news though, Bitcoin went up earlier. I did a video on the pre market opening. Bitcoin was down at 37 point something. Current dominance is 40. That's normal. But pretty much everything else is red. There's a little green area here. That's Paxo. It's a stable coin, so it doesn't really count. Let's take a look at the this is the stock market. We have some green areas and mostly red areas. I would say about two-thirds, two-third of the market is reddish, and maybe a third is green. Let's take a look at the green ones. We got Google, Apple's kind of green. We have Intel green, and we have some semiconductors here that are green. We have Intuit, probably the tax time. We have some here that are in the software applications that are green. Healthcare is predominantly green. This one we have other healthcare areas, healthcare plans, that's green. Over here we have home improvement, restaurants, McDonald's. Over here we have Procter and Gamble. These are consumer defensive stocks. Beverages, green. Real estate, we have some greens there. This one is Union Pacific Corporation. They're green. And over here we have some utilities that are green. That's pretty much. And Google is green, so we'll see what happens with the tech sector here, because this is really important for crypto because there is a correlation with them. And let's dive in and take a look at the the market on the trading view charts here on a 30-minute time frame. We have the equities market. This is QQQ, Nasdaq. Its continuous path. It was white green earlier when it opened, and now it's reddish on this candle here. So I was hoping it would stay green/white on my chart, but it did not. Unfortunately, it's continued to take a dive. And here, this one is S&P 500. They tend to run together. These two, they're like almost like twins because they share similar stocks. Because the index funds is also red. The Dow is also red and continuous path from yesterday. So this path is not looking good. And over here we have the US dollar, the Dixie. Dixie is printing green or white candle on my chart here. And when the Dixie goes up, Bitcoin and these two stock, QQQ and S&P 500, tend to have a negative correlation with it. So this goes up, these three go down. The U.S. government 10-year yields bond, it's going up. So that also tend to have a negative correlation with Bitcoin and tech stocks. So what do we expect from today? Hopefully we get a turnaround, but it doesn't look like it, unfortunately. So we're going to see more red coming in later. And this is the, let's expand this up a bit. This is the perpetual futures market on a one-day time frame. It's still red here. You can see that right here. This one probably needs to go down here because, but it could go up. I'll explain why. Let's take a look at open interest. This is this row right here is open interest backed by stablecoins. It's been on a slight downward trend on the open interest backed by the coin or BTC. It's printing a couple red candles here, so it's on a downward trend too. This top row, backed by stablecoin, is sitting at roughly 6.9 billion. The one backed by Bitcoin is 4.38 billion. Funding rate, this row right here is predicted aggregate funding rate. That's what they're predicting. So it's long right here. I mean, it's positive, which means long pay shorts for their position. And over here, this is the aggregate actual funding rate. It was positive, and then it's printing negative right here. Slight negative. So what does this tell us? Funding rate is negative. So but also open interest is dropping. So potentially, usually if this funding rate is negative, price tend to turn around if open interest is higher. But the fact that it's trending down here and this is negative, there's a possibility that it could go slightly up, but maybe not. It might just stay red and consolidate sideways here. Do a range roughly around 38 until we get more open interest up or funding goes extremely negative. But I anticipate this to go somewhat downward, but it's more sideways. Slightly down, but more consolidating sideways. Let's take a look at the high block capitals chart here for liquidation levels. This is where the current price is. We have, here's the cumulative liquidation level delta, which is the difference between the shorts and the longs for their liquidation levels. And we currently have an excess of shorts being liquidated or potentially being liquidated. And the amount is $4.45 billion if you take the difference. So that's basically this region up here minus this region down here. And they are significant. If you look at the key legend down here, the red one for this red one, that's 100x. The orange ones, these ones right here, that's 50x. The yellow ones are 25x leverage. These excessive, crazy leverage positions. And I'll give you some example. This large red one right here. See if we can. Oh, that's orange. This one is $222 million. Just that little bubble, that level alone. Look at this large yellowish one. That one is 25x at 222.4 million also. And look at just this tiny red one. That's 100x at 111.9 million. So price is going to be more attractive for price to go up towards this direction to potentially liquidate these short positions. Who would benefit from the short positions being liquidated? Well, one, the counterparty. So if I was smart money right now, I would hold long positions and go to the spot market, buy up the price, and as price goes up, I collect all their funds. Well, not all their funds, the funds that they're paying me. And guess who else benefits? The exchanges. The exchanges get to keep the liquidated, quote unquote, deposit funds in their margin accounts. So if I'm long on my position, and let's say I have a 100x long position, and I'm the counterparty to these, they get liquidated, and since I'm 100x long, I'm borrowing money from the exchanges, so the exchange will get the liquidated funds from some of these short positions and give them to me, because I borrow money doing 100x gambling. So that's how it works. So lots and lots of potential liquidation. Expect price to go up. It's gonna range for a little bit, but then sooner or later it will go up. That's not an if, it's a when. So that's looking pretty bullish in the short, in the near term. Liquidation level is down here. There aren't that many. Give you an example. This right here, that line right there. Let's just go here. That blue one, that's 100x. 100x at 46.85 million. It's a lot, but that's just one little bubble right there, and that's at 37.62. Chance of price dropping down in this area, it's possible. It can go up, clear these, and then go down and clear these. That's within range. And I'll give you some levels here. 40k is roughly right around this area. 41k is right here. 42k is right here. 43, 44, 45. So all within range. This looks really yummy right here. If I was smart money, I'd go long 100x, drop a couple $1 million or $100 million right here, and just feast. I hope that quick recap of the market is helpful for you. Let's do one last roll through here and see how things are going before we exit. Still red here in the crypto market. Oh, Google, okay, well, no, I think this is pretty much the same. Hasn't changed much. It's good that we have some greens though. That's good. It was really bad yesterday. Over here, still red candles in the equities market in these areas. Let's move that up. Bitcoin is still printing a couple red candles there. We got another green/white candle here for the Dixie. Same thing with the 10-year bonds yield. And pretty much things are the same here. I hope that was helpful for you. And if you found value in this video update, feel free to smash the like, ring my bell, and hit subscribe. I'll see you in another video later today. Appreciate it.